If you ask 10 investors why a stock goes up, you'll probably get 10 complicated answers. Hidden market cycles, macro trends, technical indicators. But sometimes the real explanation is much simpler. Imagine two investors explaining why a stock will go up. One talks about macro trends, geopolitical risks, and complex indicators. The other says something much simpler. The company keeps making more money every year. According to Occam's razor, the second explanation is often closer to the truth. Occam's razor is a principle associated with the medieval philosopher William of Occam. It is often summarized with a famous phrase, "Entities should not be multiplied beyond necessity." In simple terms, this means we should not introduce extra assumptions if a simpler explanation already works. But Occam's razor does not mean we should ignore evidence or stop thinking carefully. It simply suggests that, after considering the relevant information, we should prefer the explanation that requires the fewest assumptions. In other words, do not oversimplify reality, but do not complicate it unnecessarily either. This idea is surprisingly useful in investing. Financial markets are full of complicated explanations. Investors often talk about macro cycles, monetary regimes, technical indicators, and geopolitical models. Sometimes these factors matter, but very often the real explanation is much simpler. Take Apple as an example. Why did Apple become one of the most valuable companies in the world? You could build very complex theories about technology cycles, global supply chains, and market dynamics. Or you could apply Occam's razor. Apple sells products that millions of people want, and the company generates enormous profits. Occam's razor also helps investors avoid common mistakes. First, overcomplicating strategies. Many investors believe successful investing requires complex systems and constant trading, but sometimes the simpler approach works best, investing in strong businesses and holding them for the long term. Second, believing clever narratives. Markets are full of convincing stories. Occam's razor reminds us to ask a simple question. Is there a simpler explanation? Third, adding unnecessary assumptions. The more assumptions a theory requires, the more ways it can be wrong. Great investors often succeed not because they know more than everyone else. They succeed because they avoid unnecessary complexity. In markets full of noise and opinions, Occam's razor can help cut through the chaos. And sometimes the smartest investing strategy is simply the simplest one. If you enjoy simple ideas that explain complex markets, subscribe for more videos like this.